Well, the election just days away now, and there are a lot of issues that are being used as influencers to sway you to vote one way or the other. So what about the influence of the market on the election? And once it's over, what influence can we expect the election to have on the market? Joining us this week at our U.S. Bank Economic 360, Mike Denneman, Vice President and Portfolio Manager at U.S. Bank. Mike, good morning.
Good morning, Brian.
Good to have you with us. So we know the economy's been a hot topic, but to what extent does the market influence the election, and in turn the election influence the market?
Sure. Well, everyone's aware that the economy and the markets are intertwined closely with the election, perhaps even more so in this election cycle than in others past. So we were interested to see, can you determine what might happen on one side of the equation by what's happening on the other, and vice versa?
So we haven't got to the end of the election, so we really can't go that route, but what is the market telling us about the election?
Well, it's interesting to see that the market really can be a pretty accurate predictor of how the election might turn out. Going back to 1900, if you look at market performance for the 3 months leading up to the election, so from end of July through end of October, it gives you a pretty good indication of how the election might go. When the market is up over that time frame, 80% of the time the incumbent has won re-election. On the other hand, when the market has been down in that time frame, 85% of the time the challenger has won. So that's a pretty good track record. But unfortunately this time around, with only just a few days left here in October, the market's essentially flat over that period. So that could be telling us it's a toss-up at this point.
And that's what a lot of the pundits are saying too, that it's a very close race. So after the election is over, what can we expect from the market based on the outcome of the election?
Sure. So there are a lot of analysts out there now who are trying to decipher what either candidate's election might mean for various segments of the market. Both presidential candidates' platforms are very well known at this point. So trying to take that information and extrapolate who could get a boost depending on who was elected. So, for instance, some common assumptions are if President Obama is reelected, that areas like insurance companies or real estate investment trusts, infrastructure companies, clean energy, these are areas of the market that could get a boost. On the other hand, if Governor Romney were elected, some industries that might benefit would be utilities or transportation or tech. So, we really don't know, obviously, how the election's going to break, but that's not stopping some market observers from trying to determine how best to position portfolios.
So for the next few days, there's an uncertainty. The market doesn't particularly like uncertainty.
It does not.
Yeah. All right, Mike, we always appreciate you and U.S. Bank. Thanks for being with us.